Welcome to Know the Rules of the Game podcast. I'm your host, Desiree, Patno, CEO and President of Women in Housing Real Estate Ecosystem, NAWRB, and Desiree Patno Enterprises, DPE Real Estate Brokerage. I am also an advisor and investor for Amicus Brain Innovations, Inc., and also the Chief Strategic Officer for Zulu Time and publisher of NAWRB Magazine and the NAWRB Report. Today's Know the Rules of the Game podcast is really about the latest updates of the SBA EIDL and PPP loans. The reason we're bringing it back to you again since April 6th is because we've had so many rule changes on the SBA EIDL and PPP loans that we really wanted to make sure that we were keeping you up to date, especially because they're so fluid. So let's take a little bit breather about who I am and what we bring to the table on behalf of NAWRB. As a reminder, NAWRB is proud to be a women-owned resource partner for the SBA. There's only a few of us on a national platform, so that's number one. Number two, I am also very honored that in 2016, I was selected as a Women Business Champion of the Year for the SBA. So that has been a great honor bestowed upon myself. So last week, let's take a moment, reflect what we did last week. Last week, we had Davia Temin. And she was a world thought-out leader dealing with how to deal for crisis to chaos. Think about what we're doing and what we're talking about right now, talking about COVID, but also the economic changes and the SBA ramping up to bring all this money, all the regulations, all the changes, like in a flash. Yes, it's been a couple months. But to have the rule changes from March 30th to a couple times in into April, then into May, and now we already had 2 in June, we're talking a lot of changes here. So I want to make sure I really advise everyone on this podcast and this presentation that is very fluid. Yes, we have some hard numbers on June 30th deadlines in July, and we could go down the list. And we have 4 weeks, 6 weeks, 30 weeks on various different platforms and different requirements. But the idea that we want to hone in on here is right intentions, keeping abreast of what's going on, and making sure that you can get your forgiveness loans and you can get your working capital, and to understand that work with your local SBA people. We'll work with the question and answer. There's so much out there on SBA.gov, and they're updating almost every day. So stay abreast what's going on there. So let's start into it. Let's get into. So the idea is that we started, I wanted to get back into this, is that we really did start back in April 8th, we had the Know the Rules of the Game podcast for the Economic Injury Disaster loans and PPP. We brought that with the SBA regional one of the big classes here in Orange County. They do the entire Inland Empire and Santa Ana and Orange County, and then also several big areas. They're huge. One of the largest SBA centers here in the United States. And we talked about the CARES Act, what was signed, as we said, on March 27th. So you think about March, April, May, June. Here we are, only 3 months into the program. And we've had, 6 changes now already, like I said. And it really was said, as we all know, about to give temporary relief in the economic disaster recovery. So how are we doing now? We've heard so many changes where people were taking loans out up to $10 million that had a lot of money on their books because the employees were 500, right? We had a lot of fallout because the employees they had less than the 500 requirement, and they were getting up to $10 million. Yet they were nowhere in what we consider small business. The actual NACE codes, so it's the national NACE codes that derive what the bare minimum is for the small business. Here in real estate, it's $7.5 million gross revenue. You have some companies that go up to $50 million and higher that are building bridges and things like that. But then the caveat was, if you're in the hospitality or restaurant, there was no limit on the number of employees. It was that industry that was affected. So it was small business in the size of the employees, not in small business in the dollar revenue. And that was a really misnomer that was put out there, okay? So I wanted to bring that up to speed of what's going on. So we heard so much about the EIDL loans coming out that, hey, you could get up to $10,000 quickly in 3 days, we can fund you. Yeah, they did a little bit about that. We applied here for NAWRB and the other companies that I own to get our EIDL loan. Yes, we did get our EIDL loans, but that cash advance, if you got denied or give quick cash in the first couple days, that didn't happen personally to us, just to let you know. There were a lot of people who did get it, but they're now in the 3 to 5 to 10 million, processing applications that they're going on, and they're working through them. So they shut down the EIDL loans because they were overwhelmed, if you think about it. And so now they've reopened that back up. So if you did not get into the window of having application for the EIDL loans, they have reopened up the EIDL loans to get out there. So make sure, even if you already got a PPP loan or you applied for it, make sure you apply for EIDL loan also. So it has been reopened. And the EIDL loans go directly to the SBA. They do not go through a third party, which is your banks or your Cabbage or any of the other platforms that you apply for an Intuit, through your accounting software, let's say, to get that PPP loan. So make sure that if you're looking for capital, you cannot get this cheap of capital. What are you going to do with this capital? Obviously to keep your business sustainable. That's the whole purpose of these loans. One is more focused on your payroll, and one is more focused on your actual maintainability of your loan and of your business. So think about that. What does that mean? What does that really derive? Is business supposed to stay as it was before the economic disaster? No. It doesn't have to stay identical. Some examples of that is that we did a podcast and Turn the Dial. So if you're in real estate, let's say your whole book of business was selling in, marketing and representing buyers and sellers. What about property management? What about running commercial platforms for the business? You're still in real estate. You've turned the dial, but the number of employees might have changed. The type of business you do in real estate might have changed. The purpose of the employees on the PPP side is they want you to have the same number of employees that when you started back in February that you have now. So remember, the same number of employees doesn't have to be the same employees, but they want you to keep the same number because we're seeing some pushback on the $600 stimulus package that was given by the federal government for each of the employees. So depending on what your salary base was, would it be beneficial for them to come back based on they were making more money to work outside, not working, collecting unemployment? To counteract that, you have some states like Idaho and some other states right now that are actually offering incentives of $1,500 to come back to work because they want you to get them off the unemployment and get you back into the working small businesses. The other thing that's also going on, or any business size, but obviously a lot of them are dealing with small businesses. And where they're getting their money from, for example, from Idaho, is they're getting the money from the $1 billion that was set aside from the federal government. They're taking that $100 million of the funding from the federal government to use that $100 million, that was a portion of it, to go and offset the employees that would benefit of the $1,500 to go back to work. So that's just one state. And there'll be several other states that'll follow suit, I'm sure of it, just because we need to get the working force back into working versus then living off the stimulus package and the federal government, okay? So how does that play into the mix of the PPP and back to the EIDL loan? You as an employer looking to make sure that a number of employees are, because otherwise there's a percentage that goes with it, okay? So let's get back into some of the framework of why it was set up. So let's go back to the Paycheck Protection Program, which is the PPP and PPP, go with it. So it's for retained employees by temporarily expanding the traditional SBA 7A loan program, which actually was set up. So there's an actual program from the SBA for the 7A. And just like that, that is going to give you, forgive the loans we talked about many times before. And there's been various revisions that first started out at 75%. Now it's at 60%. We're going to talk a little bit more about that. And the idea is that they started processing loans. If you think about it, it was only on April 3rd, 2020 Here we are, June 24th, and we're talking, what, we're from March and April, May, June, we're talking 2 months. What a small window to be able to ramp this up, have all the logistics, making sure the SBA, who actually are your questions, who are promoting all the different podcasts on it, various different other talk show hosts like myself are running podcasts with special programs on it. Now you know why it's so overwhelming. So find someone that you trust, find someone who's in your corner, who understands your book of business, that you can reach out to be part of that. And the real estate community, we are the only resource that works in the SBA side that is working in real estate on the whole economic footprint, that's developing and working with the sustainability on making sure you're staying sustainable in all different aspects, and working with the natural disasters on dealing with homeownership, renters, and business owners, and now the economic disaster side. So very interesting stuff if you think about the play on all that. So again, that the PP loans were all the way through June 30th, so that's in next week, right? But let's talk about the changes when they talk about the evolution of this. We're now down to the last program as of June 5th, and we're going to talk about that on June 15th. So if you think about the previous podcast, we talked about denial was rule number 1, okay, for Davia. If you think about what we have right now with the SBA, you know, the pushback came so hard about, what about my employees? You know, all that money is going to be only for my payroll. What about my carrying costs? What about my loan, my building, my utilities, everything else with it? And the costs can be very expensive depending on what you're doing for your cabling and everything else. And so they listened. They revamped the rules. Every 2 weeks, it seems like we're coming up with a whole new rule set, right, for the PPP and the EIDL loans. So the idea is that denial, I think, is a perfect play into this rule book also, because the idea is that push back, let them know why. And with the new final rules, it keeps saying final. Well, wait a second, let's keep adjusting based on the dynamics of what we see, right? Okay, so what we have right now in the update is that on June 15th, the EIDL loans reopened. So the EIDL loans are now open as of June 15th. So now we're a week into it. They still had $110 billion on the PPP loan, and they wanted you to encourage it. But the EIDL loans, they had closed the portal because they had so many. We sat weeks and weeks and weeks waiting for it, right? Weeks and weeks. So the excitement here is that being that only took 15, 20 minutes for me to fill out the EIDL loan, process it, put it in the system, done, gone, and everything. Biggest problem was making sure that the information was on their portal correctly, whether it was the banking account information, figuring out what I was applying for, why I was applying for, what company I was applying for. But then the cool thing about it was, instantaneously, they hired so many independent third-party people to help the SBA, not just SBA employees. They're working around the clock. They've now approved several of them to work 7 days a week, 12 hours a day. That just happened last week. Some of the independent contractors also now have approval. The coolest thing about it is that you can call the 1-800 number for the SBA and ask for a tier 2 person, got that 2-2, that is an experienced person who can tell you exactly what you need to fulfill your particular EIDL loan. You give them your loan number, what your case is, and then from there they'll tell you exactly what's wrong. And they'll walk you through it, and they'll stay online till they get it done. You can be 5 minutes, you can be 2 hours. It is unbelievable. And what's even cooler is that within seconds, once you get the information in there, they can give you an immediate response that within the system it says it's approved and gone through. Let me repeat that. They have an automatic checking system between your account information to what you submitted how you, what the parameters are, done, gone. And all you have to do is click on the button when it says there's 3 buttons. The third one that says sign your loan documents. It's wired and out. Now, wait a second. What are we going to do with this money? Why are we taking this loan out? Okay, so here's some changes. So the Advanced Portal Program on June 15th is eligible now to all U.S. small businesses, private nonprofit organizations, or 501c19 veterans organizations who are experiencing economic impacts due to COVID. Number 2, the EIDL program established by the CARES Act offers long-term low-interest assistance that can alleviate temporary or elevate your business losses of revenue and help cover payroll, inventory, pay debt, or fund other expenses. Now, remember, we mentioned before that if you use part of the payroll under the EIDL versus then in the PPP, you've got to make sure you keep them separate because you don't want to overlap with them. So the EIDL Advance provides up to $10,000, $1,000 per employee. That was a new thing. At the beginning, they didn't really identify that, and then they made it during one of the rule processes they went down. It was $1,000 per employee. That emergency economic relief to businesses that are currently experiencing temporary difficulty. These emergency grants do not have to be repaid, even if you get denied. So we're going to get a little bit more into that. So the small business owners in the United States, Washington, D.C., and territories impacted by the COVID are eligible to apply for it up to $10,000 at standard. But the idea is that these loans will not have to be repaid on the $10,000 up to $1,000 per employee we talked about. So the successful applicant does not mean you have to, that does not mean you have to be approved for a loan, or a loan approval is not necessary to read the loan advance. So you can apply for the loan, but you don't have to take it. And there's a limit. So every company you apply for will have a limit. The issue is that if you don't want to take the whole amount that you're approved for, you can say, I want to take a half of it or a third of it or a certain dollar amount. Now, one of the things that I personally experienced that was something that was a little bit confusing to me. I didn't quite understand until they explained it to me, because the information on the website wasn't very clear. That if you have more than one if you have more than one company set to one email address. So for example, if you have 3 companies, let's say, or 2 companies that is associated one email address, which is how you access your EIDL loans. I thought with one email address and one company, the way it's written, the way it displays, that's it. Oh no, I can't have more than one company. I have to call the tier 2, get it fixed. Tip of the day, if you go on the right-hand corner of the SBA, you'll see where it says change business. That change business has a very small little sliver at the top on the right-hand corner that'll say, oh, it'll list the company addresses are the same, but at the very top, it'll have the different the different company names, and you have to click the button that says change business. So it'll list it, and you keep hitting the change business, and it'll take you through all the different businesses. So you can have 3, 5, 9, someone told me they had up to on different companies under the same email address. Now, to keep it easier, it might be that you want to have different email addresses associated with it. But if you do, don't rush out and panic like I did, that it's all there. So again, the tier 2, if you have any questions, okay? Some of the other things that are very important that came down here this time, let me go through, is so the EIDL is a big thing of being back open. It was shut down, I want to say, for, I believe, 3 weeks. So that's almost I would say 40% of the time we've been talking about this, it's been closed because they had so many applicants, millions and millions of applicants, because for example, for me, every single business I submitted was another EIDL loan. So if everyone was submitting more than one EIDL loan and they had multiple companies, it got gobbled up very quickly, okay? So let's move on to the PPP, which is your Paycheck Protection Program. That came out with the new updates, like I said, on June 5th. Okay, so lots of changes on that one. And the rules changed based on if you got approved and your application submitted after June 5th versus then before. So I got my PPP loans before June 5th. So my rules are different than now rules, right? And the now rules are a little bit nicer than the before rules. So the now rules, I'm calling them, is the current rules, is that what they did is that the new law adds flexibility, okay, to the PPP. So he signed that, and they actually called it the Paycheck Protection Program Flexibility Act with the FA on the back. So it's the PPP FA, if you want to get the FA, which makes it more flexible than the PPP loans originated on or after June 5th. Again, that originated on or after June 5th. Okay. So the SBA will now forgive loans received through this program if all employees are kept on the payroll for 24 weeks and if 60% of the funds is used for payroll. Before it was 75%. Now it's been reduced to 60%. And why did that happen? Because enough of us actually submitted responses and felt that this needed to be changed because our costs would be very expensive. So say, for example, let's say we have 3 employees, but our business footprint was more expensive than the cost of the employees. Not all of us, but there's enough of us that it made a difference. Besides utilities, cabling, utilities can be very, very expensive, especially in some of the bigger cities. And talked about internet, right? That's a major factor right now, getting high-end internet. So the idea is that with the 40% now going for rent, mortgage interest, utilities, and other costs. Okay, we talked about that. So also it extended with the PPP FA loan, included by extending the covered period during which businesses must disperse their PPP funds from 8 weeks to 24 weeks. So I have only 8 weeks to get my PPP in there, and now it's 24 weeks, although the businesses with PPP loans can opt to retain the 8-week covered period. Reducing the portion of the PPP, we can talk PPP funds, that it must be spent on payroll in order for the loans to qualify for the forgiveness from the 75% down to 60% we talked about. And then it also amended the CARES Act provision to extend the period from the times when it could be paid back to 5 years. 5 years, that's a good amount of time. The loan deferral period authorized in the CARES Act, it went from 10 months from the end of the loan's covered period, okay? So then the deadline for hiring the new employees was June 30th, 2020. These changes to the PPP followed 2 interim final rules, the IFRs, okay, we talked about that, issued by the SBA that went into effect on May 28th, which you can read. Okay, we can talk about that a little bit more. You can't read because we're talking about it. So the update number 2, the easy forgiveness application, which is a hot spot because how much time do we have to have the internet, making sure it works? Did it get lost? Do we have to redo it? Are we sure they got the correct information? Do we have access to all our forms? Do we have access to the information we need to get to submit? All that. Little overwhelming, especially what's going on with the market and everything else. So what they've done is they have the new forgiveness application form. It is really incredibly easy now. In addition to revising it, they have more efficient process. Like I said, literally their application, and it just happened to me, I want to say 3 days ago, that the process was seconds to make sure it got online because they were able to catch up with technology to the rules and regulations, because it's kind of like flying an airplane and you're building an airplane in flight. You got to have the foundation, the framework, and then to say, okay, we have lift, we have takeoff, right? And if you don't have the air underneath the wings to understand how to design it, guide it, and fly it, You can't move with it, okay? So let's go back to what that's looking like. Okay, so let's put this in perspective, the real estate. In the real estate business, especially if you're a broker, especially if you're running into marketing and campaigning, we don't work 8 to 5 jobs. We work jobs to where we have to hire people that work, on call. Let's say that I get a listing presentation. I got to do property management and have an emergency. I have to take care of the marketing campaigns that run all the social media and someone responds to me. We all know that in the real estate industry, you've got 10 minutes to get that 90% return rate versus then if you wait till tomorrow. Well, if you only have someone that clocks in, clocks out 8 to 5, okay, it's time to go. They're not going to get the service that they can get from someone else, and people are not going to respond, and you could lose that deal, whether it's a buyer, a seller, an emergency, things like that. So our employees are based a lot different. So are they real employees? Are they independent contractors? How are we paying them? All that makes a whole lot of factors that go in it. So in the real estate industry, we have a lot of different expenses. Our advertising, what are we doing to capture rate? What are we doing to get our pieces out there? We delivering products and services and things like that. Because remember, we went a space where real estate was non-essential in a lot of parts of the United States. And then it became essential. So just keeping up on the rules on the real estate side versus can I get access to capital to keep my company in business? Especially here, like in California, 85% of the real estate brokerages, we'll just talk about brokerages right now, are small businesses and they have 5 agents or less. So the time it takes for you to be a broker owner, making sure that the files are being underwritten, making sure your clients understand what they can and cannot do, going everything virtual, and then worry about having access to pay your bills to keep your lights on. There's only 24 hours a day. If I knew where I could buy more time, we wouldn't be talking. No, just kidding. I would love to be able to buy more time. I've been told that, you can be superhuman and still need extra time. So as a fun joke. So that being said, how do we make sure that we're keeping our employees? If we're not bringing them back because they don't want to work, because they're making more money, can we get part-time employees? Yes. Can we get full-time employees? Yes. Those kind of things are something you need to talk to and work through. Because is you having enough work to have them full-time? I know in the escrow division, in the companies, in the title companies, there's so many logistics that are going on. Companies, mergers and acquisitions are going down. How many are actually on your payroll now? Can you work for another company and then share employees? Why not? They don't have to be dedicated to you. They're allowed to work for different companies, especially if you have multiple companies within your property real estate. You have property management, you have real estate, you have an advertising company, let's say, and each one of those have a different hat, but a different company. A person could work on 3 different companies, 3 different employees. Same person, but it's facilitating those different companies. A little trick. All right, so some other things that are very interesting. So if we go to the update for the PPP loans, as of June 5th, like we said, they're made them more flexible. We talked about that as far as the development goes with it. So let's go back to the easy loan. We said the experience reduction result of the health directives related to the COVID and did not reduce the salaries or wages of their employees by more than 25%. So, easy forgiveness application. We talked about how easy it is. It should take you no more than 20 minutes. You really can get them down to 10 or 15 minutes, being real here. So, rule number 1 under the easy forgiveness application. Do not reduce the salaries or wages of their employees by more than 25%. And do not reduce the number or hours of their employees. So if you reduce the number of employees, there's a percentage that's going to go to that. But remember what I said before, if you have a person and you have multiple companies, share that employee over those companies, and then you satisfy that number of employees, right? Depending on how many you have. You know, if you have a big company, that's different. Second is that do not reduce the salaries or wages of their employees by more than 20%, 5%. So again, that's 25%. So because you're being impacted, you know, well, we don't have the overhead, we don't have the same revenue coming in, so you're going to have to take a salary adjustment. Now, we've heard we're big companies. We've heard several different companies that were taking anywhere from 5 to 20% pay cuts. They have this specifically that you can't take more than 25%. Okay, more than 25% is a pay cut to go with it. So in contrast to the regular application, the easy application requires fewer calculations, less documentation for eligible borrowers. Like I said, it's really easy. Interested applicants can find more detail, but this is really about it's down to how much you have for a whole year. It's very self-explanatory on the website. I don't want to go taking too much time today to go over what the requirements on the full application, but the requirements are so minimalized on this time. So as long as you have, you know, how many employees you had, what was the total year revenue to go with it. I used my quarterly, my 941 returns, and is able to upload those in. It was a couple pages. It had, you know, what I had for the whole year, had for my quarterly reports. It proved the company paid them, done, gone. You could easily calculate how much money that was, and then it had a calculator 2.5% done, or 2.5 times, and it calculated everything, done, gone, history. So again, very easy. Okay, so now we talked about before that both applicants give borrowers the option of either using the original 8 weeks covered period or the 24. So I'm going to go back into that. So that's very, very important. Okay, now update number 3. Now we're already up at number 3, and we've only been how far into June? Okay, so the SBA and the Treasurer will increase transparency of the PPP loans. On June 19th, it just happened that the U.S. Small Business Administration and the U.S. Department of the Treasury made a joint announcement that they will make additional data public to the PPP loans in agreement with the leaders of the U.S. Senate Small Business Committee. All right, here we go. They made an announcement that please watch for additional updates. So the SBA will disclose information about the recipients of the PPP loans. Why is this being brought to us? You're applying for a loan. They haven't finalized all the pieces. You're doing based on what the application is at the time. The rules can be updated, hopefully to help you in the long run. But the idea is they want you to keep having good faith. They want you to feel confident that you can still keep your business, and they understand that you have to turn the dial. That's not going to be exactly how it was before. You have to be in the restaurant business, hospitality business, the real estate business, marketing, advertising. It's all shifted. Just saw a graph that came out today about the only job market that really hasn't gone down is the IT, the informational side. Obviously, working in IT, that demand has stayed very high, especially here in California, because of online, right? Very high demand. So with that being said, they're now going to disclose, if we go back to the original opening of this podcast, we talked about how there were people that were getting $10 million loans that were well underneath the number of 500 employees. They were hedge funds, marketing managers that had, that controlled capital markets that maybe have, 15, 30 employees, but they were managing $20 billion. Hardly a small business in the dollars, but definitely a small business under the 500 employees. And that was defined as small business at the time. It was only the 500 employees, not the dollar amount. So now we saw pushback from some big time companies that gave a lot of the money back, 2 million, 5 million, 10 million, that gave it back and real quickly because they found out that they applied for a loan. Even some of the professional sporting teams. You heard me right, the professional sports. So what happened is that the SBA will now disclose information about the recipients of the PPP loans, including businesses' names, addresses, the NACE codes, and NAICS codes. Those are what the industry standards are for what the dollar amount is for the small business limit. And had the original marketing from the SBA been, this is only about the size of your company based on employees, not about the size of the dollar amount of you being a small business based on the economic small business, a lot of the conversation that wasn't always pleasant would have been avoided, because the fact is that it was based purely on employee size. And in the two industries we talked before about the hospitality and the restaurant business, there was no employee status numbers. Okay, so business type, zip codes, demographic information, nonprofit information, jobs supported. So think about it. Even though the company might have 500 employees, or let's say in the restaurant business, let's use the restaurant business, and let's say they have 6,000 employees and they're in the restaurant business, and we said they did not need to have less than 500 employees. And let's say they were doing, $40 million a year in business. They could get their $10 million loans. And their argument is that they still had 6,000 employees that they were able to keep on the payroll because they were the ones that were employing the people in the same mentality, whether you were a mom and pop restaurant versus a big time chain restaurant. And a lot of the chains are independently franchised, just like the hotel industry. And that was the argument. So the idea is that if they're going to showcase you is that how many jobs they supported, and the last was what the loan amount ranges. Loan amount ranges, so they weren't going to disclose the privacy of how much money they actually got. They were just going to give you the range. Okay, so for loan amount, so the ranges were $150,000 to $350,000, $350,000 to $1 million. That's a pretty big range. $350,000 to $1 million. So $750,000 versus $350,000 is a big deal. I didn't come up with the ranges. $1 million to $2 million, $2 million to $5 million, and $5 million to $10 million. 9 million versus 5 million. That's a lot of difference in money. Thank you very much. So you can imagine, do you look at the pros of 10 million thinking they got that, or do you look at the 5 million thinking they got that? Either way, it's gonna be a lot of money, right? So those that were below $150,000, below $150,000, the following data will be released, and only for the $150,000 below. Totals aggregated by zip code, the industry. So remember, the NACE codes classify you not only by the general industry, but also the sub-industries that go into it, okay? So they're going to break it down by totals, the aggregated by zip codes, the industries and business type, okay? And then the various demographics of the categories. So you really broke it down to 1, 2, 3, 4 industries, 4 different categories of the 150,000, where before there were several more. There's almost double the amount of categories that they're going to break it down. And they only had a 14-day grace period, if you remember, on those that could turn back the money with no penalty, no fees that were due. Just say, you know what, I now see the new rules. I understand that you really didn't, that I had other access to get money. So the whole purpose of doing this, I shouldn't say whole purpose, but one of the big main reasons for doing this is that these companies that were not small business had avenues of getting money through other channels, raising capital, get that from other venues, different ways of getting their sustainability, where typically a small business does not have that flexibility of raising capital like that. So that's why the SBA was put out there to help get sustainability and keep you going, because we are the drivers for the economy. We got to remember that the small businesses, you, I, that are all listening to this podcast and want to know the rules, is that we are the drivers. And if we go out, who's going to be here to drive the major footprint? Okay, yeah, the big companies. And one of the things that we're doing here at NAWRB is we're really trying to say, let's attract small businesses to your state. Because instead of attracting the big boys and the big companies coming in, why not attract the small businesses? Because if we're the driver, and we are the driver for the economy, then let's keep this sustainable and let's give the tax breaks to us. Let's keep our revenue. Let's give because we're nimble. We can turn quickly. We can make this work. But we need your assistance there's only so many hours to be able to keep all the moving and the shaking going on, especially if you look at this, because the big companies, they have full-time CPAs, several companies, they use several different agencies, lawyers, they go down. So for them, when the PPP came out and the EIDL loans, yeah, let me hear it go done. They were one of the first companies to get their submissions in there. Where you and I were going, what are we doing? Okay, oh, wow. I should take advantage of this. Let's do this. And someone who's teaching it and bringing it to the forefront, making sure it's the right information and it's the right, and with the fluidity of it, and making sure that we're giving correct information when even the SBA was like going, okay, I didn't know about this rule change. Did you know about it? Okay, let's wait till the end of the month. The rules are not changing. If we all remember, we'll wait till the end of May. They're going to come up with final guidelines. Here we are at almost the end of June. And we keep changing the guidelines. So don't beat yourself up over it. Be focused on the fact is, what am I doing for my business? How can I get some access to money and go with it? Well, the worst thing that can happen is the forgiveness part might not be forgiven, but you're only paying 1% on the PPP. We all want to have free money. Come on. I'm the first one to say that, sign me up. Yes, keep an abreast on it, making sure that you understand the rules and how they're changing. But the idea is that you've got the access of the 1%. Now on the EIDL loans, the nonprofit being at 2.75 and the for-profit being at 3.75, that's so cheap of money. Where are you going to get a business loan at that cheap of money? Making sure how you write it off, are you going to be able to use it, making sure that you're using it for the intended purposes of what the economic disaster loans were meant for? Are you looking at for the purpose of keeping your business afloat? Were you using it for investment purposes for your company? Are you paying loans back to officers? Did you borrow money to start your business like most women do, and or any small business? Did you borrow money from your officers, your owners, to get the company off the ground? If so, here's your way of getting the money back into the capital, get your products funded that you're supposed to do it. But also there's ways that you can, talk to your CPA. I'm not a CPA. Make sure it fits in your business plan. But the point is having an opportunity to have the money to help keep your business sustainable, especially with the dynamics changing. Do I take payroll? Do I not take payroll? Do I go with it? So make sure you have your allocation. What are my options? What kind of loans can I apply? Because remember, you don't have to take the EIDL loan. It's free processing. It takes less than 20 minutes to get done now. The documentation is minimal. And if you get it approved, you don't have to use it. There's no harm, no crime. There's no crime in the sense of you use it. You don't use it, who cares? But the point is that to have that opportunity, to have that money, available to you to process it is fantastic. So keep that in mind. I'm at a position right now, I'm also contemplating, do I take the money that's been approved for me, and am I going to make sure that I can set aside, use it for what the purpose is set it for, and it's going to be allocated to get it done, and get it done right, and now, and not cost, because it is going to cost some money, even in less than 4%. It can add up if you're not on the market. Are you going to be so involved in this an overload? So don't add stress if it's going to cause too much of a problem for you. But the other thing is that it's allow you to keep your company open and give you time to repivot, and we like to call it turn the dial. Okay. So with that being said, how can we also not just do an update on the PPPs and the EIDL loans? You know, they're talking about how a percentage of it might not be allocated, you know, based on the number of employees, that you might not be able to make it. Are you consciously trying? Can you find them? You know, one of the challenges I have here in NAWRB is that, in the other businesses I run, is if you're the visionary and you have all these incredible platforms, how do you train someone remotely, and are they skilled in the set that you need, and the uptime it takes to get them up to speed based on that you're constantly evolving? Okay, so are you going to be able to do that, and is it going to add value to you or detract value? Do you have the staff to actually create all your training to make sure that it's all up to date, and you're dealing with all the changes because it might not be in your new employee handbook? Have you updated all your platforms as a small business owner? You know, these are all things to think about. So make sure when you're applying for the loans and you get approved, you've got certain limitations. You got 2 weeks to 30 days. And if you get an email sent to you, make sure you respond in a timely manner. One of the tricks I found out that was very good is that when they didn't accept your account information, that if it didn't like the exact spelling of it, or that you had a DBA, or you had there was something off with the account in some capacity, take a copy of your deposit receipt, that it has to have your routing number on it in addition to your account number. So let me repeat that. Either take a void check or a deposit receipt that has your routing number and account information, because remember, your account information only has, when you print out a bank statement, only has your account number. It does not have your routing number on it. And so by taking that, emailing it directly to your tier 2 rep or your SBA rep that's processing your EIDL loan, it's there. Now, if you're going through some of the different banks for the PPP loan, some have opened up, some have not. Whether you're with a big bank, a little bank, there was some envelopes in there to where time windows where the SBA did not allow the big banks to process the loans. They had to be paused. So the small businesses, the small banks, could actually process the PPP loans. So they've been playing a lot of start and stop. So the idea is that if you go to one bank to apply for a loan, don't hesitate to apply. It's several different banks for the same loan. You only get one, don't double up. But the idea is that one might be faster than the other. One might be simpler. One might be deny you for whatever reason. So make sure you apply more than once, just to make sure. That was the trick we did back in the very first days, you know, back in April and even the end of March, is to make sure you applied in enough places that you could get in the window, because it was so quick and short we saw it. And then they kept adding more money, and then they kept adding more things. And now we have all the flexibility that's going on. And believe it or not, there's still, you know, $100 billion still sitting there unused, because everyone got scared. Everyone pulled back and said, wait a second, what am I going to do with this money? I don't like the rules. I'm not eligible. And then remember, a lot of the money came back. Okay. So, you know, you're talking 10 million, you multiply it by 100, That's a good chunk of change. Okay, so let's move on here. So the ideas is that we talked about the triple PFA. We got down to rule number 3. We talk about the loan forgiveness. We talked about the loan amount under $150,000. Then we went into, let's change gears. We're going to do a bonus today. The bonus is going to be the statewide access to capital programs. I wanted to make sure that we gave you not only the SBA EIDL and triple P loans. Why? This is about access to capital. This is about helping you through to be sustainable. One of the greatest gifts that we can do here, not only myself through the organization, but running, is make sure that you have an economic footprint to be sustainable, okay? So let's address that. We're headquartered here in California. Lived here a majority of my life, born and raised here in California. So let's focus on that just a little bit right now. So California Infrastructure and Economic Development Bank is iBank finance programs. They actually have allocated $50 million to the Small Business Finance Center at California iBank to mitigate barriers for capital for small businesses up to 750 employees. Those that might not qualify for federal funds, including businesses in low wealth and immigrant communities. Now remember that $50 million was set aside for it. How cool is that? Again, that the name of the bank is called iBank. Okay, is a site of California that's going through that program, that's doing it. It's a finance program, and it's through the development company. So let me give you a little bit more information about that. And it's through the Small Business Finance Center at California's iBank, and the $50 million allocation will be used to recapitalize the iBank Small Business Loan Guarantee Program. Okay. So that money is allocated for the Disaster Relief Loan Guarantee Program. This disaster program provides guarantees for up to $50,000, again, $50,000 for small business borrowers who declare natural disasters. Another one is the California Capital Access Program. Again, that's CalCap, the California Capital Access Program. That's up to 500 employees also. And the CalCap is a loan loss reserve program, which may provide up to 100% coverages on losses as a result of a certain loan defaults. Individual borrowers are limited to a maximum of 2.5 million enrolled over a 3-year period. And so to find out who you can get from the CalCap is that's through the California State Treasurer's Office. Their phone number is 916-653-2995. Again, that's 916-653-2995. And then one more is the Cal OSBA. Again, that's Cal OSBA, Cal OSBA, is a small business assistance and resources. It is a California network of small business centers to help businesses figure out what loans are best for them. So that's really cool. Again, that's CALOSBA. So the idea is that having a state organization that's going to help you within it, because these programs are popping up. They might fund out. They might get new ones. They get reallocation. It's so much to understand and keep on top of and make sure you're getting that. And then also you have the Go Biz office of the SBA Small Business Advocacy directly. Again, that's the Go-Biz, B-I-Z. So those are 4 different platforms here in the state of California that have additional funding resources. There's many more, and they come and go, like I said. So that's a snapshot as of today on June 24th that's out there that's still being advertised, that they have programs, platforms, and groups to help you. So one of the things I want to highlight real quickly is I want to so much emphasize is that your business use funds. Are you using them for good intentions? Are you able to capitalize and keep your market and keep your business sustainable? Are you trying to get the amount of employees back? Have you reallocated funds based on the business expenses you have? Because at the end of the day, I personally believe that the rules are going to continue going to evolve. They're really trying to target to keep you sustainable. And if you can document the reasons and put down what and why you did what you did to make sure that you have a good case. You know, we're not here, we're not giving you advice, but the idea is that having that information, you're telling your story, why you did what you did, how you did what you did, to you know, how it impacted you. Because this is not capturing all the different industries, it's not capturing all the different circumstances. It's trying to capture and help the masses of the small businesses. So that's what I want to make sure. And if there's something in closing that we can help you get that message directly to the SBA, if we can share and understand your concerns, that's going to make it better. We are here to help you, to help us get the information for the entire ecosystem. NAWRB's platform is leveraging resources. So let us help you, help us, and it's a win-win. Because the more we can help leverage your unique situation, or you're one of many, or you have a unique platform that can help others, it's what we're all about. Because know the rules of the game is bringing issues to the forefront so we can disseminate that information to the appropriate parties that's going to make us better, make you better, and then we can share that information. It doesn't matter if you're in Wisconsin, if you're in Barstow, California versus San Francisco or New York. The rules, the multiple layers of government, from feds to state, to county, to municipalities, to local programs, is also vastly different. And that's why it's so important to stay in tune, to see what we're doing, how we're doing, and why we're doing it. So I hope you enjoyed this format, bringing information to you. And it's a new experience for us to have it to where we're going to have guests on some of the podcasts for Know the Rules Game. Others we're going to have breaking news. It's going to be very important because we want to make sure that we get this information into your hands as quick as possible. At the same time, not just have it in written form, but you can interact. You can actually have and see the live and the coverage and the information. And then I'd like to thank everyone for tuning in this morning on Know the Rules of the Game and what we're doing here at NAWRB. So a couple highlights. Again, we've had several of them for the every week here for 2020 regarding, we trademarked Know the Rules of the Game last year. We have our WEIR report coming out here shortly, the 2020 Women in Housing Ecosystem Report. It's so packed full of information about being sustainable, from access to capital, from real estate, all industries in real estate, to diversity, equity, and inclusion, to STEM, to aging population, to business ownership, including family offices, which is your 100 million and above. These data points is what makes the difference into making sure that you're sustainable. Give you the vision on how you can transfer that information. And a closing tip, it is estimated that 60% of the jobs that are going to be in the future aren't even created today. So if you have your current workforce and you take time off and you get back into the industry, or you just graduated from college, or you're looking for a new lane to get trained in it, you go back to school to get trained in an old job, and that might not exist. So you've got to be, if you're not seeing what you like working for someone else, or that opportunity might not be there for a business, start your own business. It has never been a better time to have access to capital, to understand the opportunities, the workforce that's really applying to get small businesses be sustainable, to keep their doors open. And when one closes, the opportunity to be nimble, especially in today's newness and new ways that we need to help each other, are being created every day. So again, I'm Desirée Patno. I'm the CEO of NAWRB. You're welcome to please follow us on our newsletter and also on our website, nawrb.com. And we'll see you next week. We air again 8 a.m. every Wednesday morning, Women's Wednesday, or again, Know the Rules of the Game. Thank you very much and have an incredible day.